Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Before I start today's video, anyone who's interested in joining my Signal team, then make sure you visit my website dailymarketmovements.com where you can subscribe. I've left the website link in the description of today's YouTube video. But let's get started here with the S&P 500. We're trading down 0.5 of a percentage point today, currently trading at 5,278. We're back testing the previous area of resistance, which was the March peaks. This is an area where I do expect to see some sort of support. I think what's actually happening here, if we just break down this chart a little bit into the, let's say the 4-hour chart, we're currently trading within a 5-wave pattern here. I think that was the first leg, followed by the second. We've just seen the third, which is of course is the longest leg, and now we're currently in the process of bottoming here for the fourth. And I think we will have one final push up towards, let's say, 5,400 for the fifth wave. Now, this is what I expect to play out here with the S&P 500. One thing that's for sure, team, is that we are starting to see a weakening economy. Data has come in significantly lower. This chart here is the Citigroup Economic Surprise Index. What does this mean? Well, whenever you have economic data that's released on the calendar, when it comes in softer than expected, you do tend to see this fall lower. So typically speaking, a lower chart here means that it basically means that the economy is actually becoming weaker, and once this chart is actually at a high, that means that the economy is pretty strong. So we can see this little surge that we've had recently, and that was due to the consumer, the confidence number to come in significantly higher than expected. That was yesterday, so that's why we've seen a bump up there. But ultimately, if we just kind of look back on the past month, we've definitely seen a big decline in the US economy in terms of the surprise index. So that is a little bit concerning, but of course it's good news as well, because it means that we're more likely to get rate cuts. Now, I am in the camp of 2 cuts. At the moment, the market's pricing in 1.4 to be very specific, but I do believe that we can eke out 2, because what's on Friday, we have the PCE inflation data. I do believe, according to my sources, that is going to come in slightly softer than expected. And then as we go into next week, we have the jobs number, non-farm payrolls, and I do expect a softer number there as well. So that could be what sends us up towards 5,400. I think once we get to 5,400, we are going to see some problems here for the S&P 500, but a move up, towards 5,400, that represents a 2.5% gain from current prices. So a very, attractive gain from current levels if you are a buyer here for the S&P 500, which I would advise.